Okay, I just started recording. There's just two of you guys here right now. Some other people may jump in as we go, but Ray, you kind of requested this. You needed some help, and there was a couple other people that aren't here yet that needed some help. So what exactly do you want me to go through with this? Or Lindsay, if you have any questions, go ahead and speak up too, because Ray's connection is not all that great. He's gone now. Are you having any trouble with it?
Um, yes, I just okay, so when I started doing the comparative part of it, in the examples we have, there's two comparatives, like for each company, there's only one slot to do one comparative. Do I put them both in the same or?
Yes, because you're only doing the income statements for the companies for those. So you can put both
Okay.
income statements on the same one.
Okay.
Is that all? So yeah. That's pretty simple there. And yeah, just put the lazy boy on top and the flex still underneath it.
Okay.
Welcome back, Ray.
Hey, sorry, I couldn't hear you.
So what kind of questions do you have?
I have absolutely no idea what I'm doing, apparently.
How's the board right there? Okay, Ray. So on the comparative one, you're going to have a comparative tab on your Excel file. Okay?
Yep, I see that.
You can copy and paste both companies' income statements onto that tab, okay?
All right.
You have 2016, 2017, 2018. We'll say the top line was like revenues, right? I'm just making up
Yep,
numbers here.
it says sales, not revenue.
Okay, so once you have that copied across there, copied and pasted, you need to add two, well, for the comparative, you need to add three more columns in. Another 2016, 2017, and 2018. And everything that goes into these columns are going to be percents. 2016 is our base year. So you're just going to take, so 2016 would be 100,000 divided by 100,000 equals 100%. Okay? Every one down the line for your income statement is all going to be 100% in 2016. Does that make sense?
Yep.
When you get to 2017, you take the number you have in the 2017 column and divide it by the 2016 column.
Gotcha.
So you're going to get 130%. And then for 2018, you are going to get 150%. You have to do that for every line item down the income statement, okay?
All right. Do you want me to do the one with the assets on it too, or just the income statement?
What's that?
You want me to do it for the balance sheets or just the income statement?
For the comparative, just the income statement.
Gotcha.
So, do you need any more explanation on that, or is that pretty straightforward now?
That seems pretty straightforward now.
Okay, so that's your comparative. For your common one, again, your income statements are going to have 3 years. You can copy and paste them, but you're going to do an income sheet and a balance, or an income statement and a balance sheet for this one, okay? The balance sheets are only going to have 2 years. So when you copy and paste those over, you only have to do these for 2 years. Add 2 more columns onto it, 2 more years again.
Does it matter which years we choose out of those two?
You have to use the last 2.
Last two. Gotcha.
Yeah, always use the last 2.
So for the common with the income statement, you have all 3 there and then 2 after that. You always still need to do 2?
For the income statement, what?
So the income statement on the balance sheet, or the income statement, common income statement, you have 2016, 2017, 2018, and 2017, 2018. You got 80, 2016 again?
Yeah, you only need 17 and 18 for your percents, okay?
Gotcha.
So I'm just throwing some numbers up here, okay? For your income statement, when you get over to the columns that you added, you're going to take all your numbers and divide them on your income statement by sales in the same year. So for 2017, this number is going to be 100% because it would be 130,000 divided by 130,000. When we get to the cost of goods sold, it's 80,000 divided by 130,000.
Gotcha.
Or 61%. And then if we had 2018 for your next one, again, this is going to be 100% because you're staying in the same years. It'll be 150 divided by 150. Your next one down would be 100,000 divided by 150. And then you would just do that for every line item on the balance sheet, okay? Everything divided by net sales in the same year.
Gotcha.
When we get to the balance sheet, it's the exact same process, only you are dividing everything by total assets. So your 2017 and 2018 column for total assets is always going to be 100%. And then you just divide every line item. So like 50,000 divided by 200,000. So your current assets for this case would be 25%. And these are just numbers to help you compare companies from year to year and across companies. Just kind of compare how much they have in current assets, how much do they have in cash, stuff like that.
All right.
So there's your common statements. Any questions with that one?
No. I think so.
And then on your last tab, you have ratios. All you have to do is list Lazy Boy across the top and then start, I forget what they all are. I don't have my document pulled up, but I have them all listed in the instructions on which ones you have to calculate. So just list the name and then in column A, just start listing the current, quick, debt to equity, and then just start putting your numbers right here. That's all you need for the last sheet is just to name the ratios in column A and put what the balance is or what the ratio is in column B, okay?
So it's just putting down what you said, the list, and then put the numbers?
For the ratios, yeah, for each company, have a company heading, write down what all the ratios are that I gave you on the instruction sheet, and then just calculate them next to it, okay?
Calculate them, how?
How? Well, I'm not gonna go through every ratio with you again. But those are on the videos and it's in chapter 14 in your book. So like the current ratio is current assets divided by current liabilities. The debt to equity ratio is total liabilities divided by total equity, okay? All of these are listed out in your book really well, and they're all just simple division formulas, okay? You just have to go back onto your balance sheets and everything and find those numbers. You're always using the 2018 numbers to calculate ratios. If you have to use an average, you will use the average of 2018 and 2017. Because there's some turnover numbers where you have to do an average on. Okay.
How do you do return on assets and return on equity? Because on the video you did it wrong, and then I didn't really understand it when you redid it.
Austin, I will send out an email with the exact formula for that, okay? The one thing I did on the return on assets is I forgot the tax rate the first time I did it, yes.
All right.
So I will send out the exact formula in an email as soon as we get done here.
Okay.
Okay. But once you calculated this whole Excel spreadsheet, then all you have to do, instead of writing that whole 4 to 6 page paper like it was originally scheduled, just write me a 1-paragraph conclusion on which company is the strongest. And if you were an investor or advising an investor, which company do you suggest is the best company for someone to put their money in and why? And this is where you'll use some of your numbers. You can use some of your ratios or some of your trends that you saw in the other one and say, you know, their profits have been increasing more than the other company based on this analysis. Stuff like that.
All right, thank you.
And for you guys that are here, as soon as we get done here, I plan on making the next video for chapter 12 also. Over some more. That is the most difficult chapter, especially to try to teach online with the time value of money stuff. So, does anybody else have any questions while I'm here right now?
I'm good.
Austin, did you get your stuff figured out with like the formulas and stuff?
So I guess I did it all wrong though. Because I thought you had to take the on the comparative, I thought you had to take 2016 minus 2017, and then you had to divide it by that number that you got by 2016.
Okay, you can do it that way. So like when I had 100, then I had 130% or whatever going across when I was giving that example. Instead, you'd have 100%. Then in your next one, you'd have 30% instead of 130. Okay, you're going to get the exact same number. Just when you're reading it across, just know if it's 130, it increased 30%. If it's 97, it went down 3%. The way you're doing it is just giving the change. And either way is acceptable.
Okay.
You're getting the exact same information. Does that make sense?
All right. But like I would have to do, so like 2016, 2017, it was like a negative 1.59 change. So like, would I have to change that or?
You can leave it as a negative 1.59, but if you did it the other way, it would come out as like a 98.4, right? So that would also show me that you dropped 1%.
All right.
See, so you're getting the same information, you're just listing it in different ways. And either way is acceptable, whichever way makes most sense to you and whichever way you can remember.
Gotcha. Okay. Would I still have to go back through and put like 100% for 2016?
Yeah, but that would be really easy for you to do. You know how to do that?
Yeah. Yeah.
Just put a formula in that first thing and then drag it and drop it all the way down.
All right.
Right, and I wrote that on there for me, so I will email that to you, the class, as soon as we get done there, return on assets formula again. I don't have anything else for you if you guys don't have any other questions.
I'm good.
Are you sure, Ray? You were the one that was really wanting this. I want to make sure.
I mean, you pretty much covered everything. I just gotta go check the ratios and the notes and stuff. Should be good.
Yeah, I think there's maybe 7 to 10 of them. There's not a whole bunch of ratios for each company, so.
What? I couldn't find the equity multiplier either.
That is not on your sheet, is it, for you to do?
Oh, I don't know. I went back to that one homework assignment. I just copied and pasted all those into the thing.
Oh, no, I don't have you do the equity multiplier. The equity multiplier has a good purpose, but it's more of an economics thing. It's not very useful for accounting purposes.
All right.
It goes more with a DuPont formula. When we get into more finance classes, it becomes more helpful. But for the simple analysis we're doing, it's a little too complex. Okay, anything else? Not, lady and gentlemen.
I think I'm good.
I'm going to sign off here. Enjoy this nice weather we're having.
Yep. Thank you for
See you all again soon.
Thank you.